candle number 3, in this case this is my candle number 3, is the low of candle number 3 in line with or overlapping the high of candle number 1? In this case, you can see that the low overlaps the high of candle number 1. That means that your answer is yes, and this particular price action is balanced. So here you can see that for this particular bullish push to the upside, over the course of these 4 candles, price action is balanced. Price action is efficient. We can essentially say that the number of buy orders and the number of sell orders for the duration of these 4 candles, alright, are the same. Okay? If we now focus in and look at our imbalanced price action, what we want to do is we want to focus on these 3 candles in here, right? And again, it's a bullish trend, so we ask ourselves the question, is the low of candle number 3 in line with or overlapping the high of candle number 1? Now you can quite clearly see here that the low of candle number 3 is nowhere near in line or overlapping the high of candle number 1. Now that means that your answer for that particular question is going to be no, and that means that here you have imbalance, you have inefficient price action. Okay, now in order to mark out that imbalance, essentially what you want to do is you want to mark it out from the high of candle number 1 all the way to the low of candle number 3. This is now what is referred to as our imbalance zone. Okay, I'll say that again. I'll start from the top. We're asking ourselves the question, because it's a bullish trend, is the low of candle number 3 in line with or overlapping the high of candle number 1? We can see that the answer here is no. In fact, the low is nowhere near the high of candle number 1. Therefore, this is regarded as inefficient or imbalanced price action. Now we can denote, or we can mark out that imbalance by pulling on a zone from the high of candle number 1 to the low of candle number 2. And this is what's referred to as our imbalance zone, alright? You'll notice some people refer to this zone as FVG, okay? Now all they're referring to when they refer to it as FVG is they're referring to fair value gap. Essentially what they're saying is that this is a gap in price action where there exists a disparity for fair value, alright? Now fair value is essentially when buy orders and sell orders are the same over a period of time. Okay, so this is how we identify imbalance in the markets. Very, very simple. Okay, now that we have that theory in place, now that we have those rules in place, what we're going to do is we're going to hop onto the charts and we're just going to look for some examples of imbalance zones using the rules that we've just discussed here. All right, so here we are on USD CAD. This is the 1 hour chart. I think this is price action from the 23rd of August, and we're going to now use these rules to try and find some areas of imbalance. So remember, we're focusing on 3 candles at a time. Okay, so if we look at this particular price action in here, I think we can all agree that price action is pushing down lower. Why do I say price action is pushing down lower? Well, purely because we are creating lower lows, okay? And we can see that here we're creating lower highs. So, straight off the bat, before anything else, we can see that here we have a large area of imbalance, okay? So if we zoom in a little bit more, and we focus in on what price action is doing, we're going to be looking at these 3 candles in here. So we're going to be looking at 1, 2, 3. Okay, so here we can all agree that we're looking at a bearish trend, right? Price action is pushing down. So this is going to be candle number 1, and then this is going to be candle number 2. So when we're looking at a bearish trend, the question we want to be asking ourselves is the low of candle number 1, alright, is the low of candle number 1 in line with or overlapping the high of candle number 3? So there's the low of candle number 1. This is the high of candle number 3. As you can see, and if I actually bring on a line tool here just to help denote that a little bit more, you can see that we do not have this low in line or overlapping the high of candle number 3. That means that we have an area of imbalance that exists in here, right? So that is imbalanced price action. This means that over the course of these 3 candles in here, okay, the number of sell orders were significantly more than the number of buy orders. So we have created this area of imbalance. Now, if we just look at price, and if we just look at what price action did, so we had this area of imbalance, okay, in here. What we can see is that after price action pushes down, we have price action coming in and creating a new low. Then we have a steady bullish pullback, and you notice how this bullish pullback comes in and almost perfectly, if I just extend this line here, notice how price action almost perfectly pulls back to completely fill this imbalance before rolling over and continuing with the underlying bearish trend. That's not a coincidence. That is price action coming back to fill or to restore some kind of equilibrium in the price before continuing with the underlying trend. Alright, so if we look at it now from a smart money concept point of view, what we can see is we can see that we have a valid break of structure to the downside in here. Okay, so this is our 1 hour break of structure. What this 1 hour break of structure essentially does is it originates. Okay, so if I just very quickly, I remove this, if I pull this just a little bit low, you can see that this 1 hour break of structure originates from this 1 hour, okay, originates from this 1 hour supply zone. Now, how do we know that this is a valid supply zone? Well, because we have a bullish engulfing candle, right, that forms after the zone is created. We have a valid break of structure after the zone is created, and we have this imbalance that is left behind after the zone is created. So this is a valid supply zone, and we can see the price action then pulls back up. We obviously don't quite mitigate or tap into the zone. If you are someone that trades the open of zones, you'd probably want to front run your order just a little bit, but essentially you're looking to trade from this particular zone. You're looking to cover, let's say, this high, and you're looking to trade price action down towards this level in here. That's a 4.9. all right, so this is obviously bearish, because there are no guarantees in the markets. You need to understand that you are playing a probabilistic game. Okay, this is obviously depending, we don't know what the context, the higher time frame context is here, but this is a higher probability setup. So the odds of this particular setup giving you the bearish reaction is a lot higher than the times or the odds that this is going to happen, where price action just shoots through. So I want to make it very clear, even though you are able to identify a high probability setup like this that meets all of your rules, that has that imbalance zone, it does not mean that price action will respect it and continue down low. Okay, but essentially that's how you combine imbalance zones with your supply and demand zones to find those higher probability setups, because we saw it playing out in here. Okay, we saw it play out almost perfectly. You'll notice that you have an imbalance zone there. So notice how you have an imbalance zone that doesn't actually lead to a bullish push up. Okay, you have another imbalance zone down here. If you mark that out, and guys, feel free to, over the weekend, right, even during live market conditions, just go ahead and mark out these imbalance zones and look at how price action interacts with them. In this particular case, notice how, okay, you have this imbalance zone. Just below it, just below that imbalance zone, you now have a demand zone in here. So let's mark that out as a 1 hour demand zone. Okay, we know obviously that it is a valid demand zone because you've got the engulfing candle, you've got the break of structure, you've got the imbalance. Notice how here, this 1 hour demand zone, it actually gives you a tap into the zone. That's a valid mitigation. So that is a level that you can comfortably trade from. And let's just say you're aiming for imbalance. What I like to do is I like to aim for imbalance, especially when I'm trading intraday. So even if you just trade, or even if you just aim for this imbalance zone that we identified earlier, you can see that you're going to be taking a 4.5 hour trade here that quite easily reaches your target. So using the rules that I showed you in this video, go ahead, open up any bit of price action that you want and just practice identifying imbalance zones, right? Identify those imbalance zones and look at what price action does when it comes in to those imbalance zones. Also, try and identify whether or not there is a valid POI, whether there is a valid supply or demand zone that forms just above or just below the imbalance zone. More often than not, you will notice that these imbalance zones, right, come from or are a result of a supply or demand zone that is created. Because remember what we said in our video on supply and demand. These zones are areas where a large amount of orders step into the market. So in this particular case, we quite clearly have a lot of buy orders stepping into the markets, pushing price up. The characteristic of an imbalance zone is it's when you essentially have a large disparity, a large difference between the number of buy orders and the number of sell orders. All right. If you guys enjoyed this video, please make sure that you hit that like button. Do subscribe to the channel so you don't miss out on any future content. I appreciate you guys so much for watching, and I'll see you in the next one.